So Dan, you've called Jensen Huang the godfather of AI. You say he delivered once again. But we were just hearing from John Vin about that data center miss being disappointing. We've seen signs of slowing margins. You remain bullish, but are we flirting with bubble territory here, at the very least, seeing some more risks and cracks below the surface?
Yeah, I don't see any cracks. I mean, I think to some extent, when you factor the China numbers in, it's actually even more bullish than expectations. And I think when you look, if you start to go through everything and you're clearly going to nitpick, and was data center, obviously a little slightly disappointing. Yeah, but the reality is you're looking at probably the street underestimating growth by 25-30%. That's why I think this is going to 5 trillion by early 26.
Can you factor the China numbers in though, Dan, considering all the unknowns that are out there? We just don't know if we're going to get that approval.
Yeah, the problem is that, look, and there's going to be skepticism on U.S. China, but the reality is that the biggest poker chip at the table is Nvidia. I believe they're going to sell into China. That's what ultimately could be 50 billion, 50% type growth. And again, there's one chip in the world fueling the AI revolution. And that's led by the godfather of AI, Jensen Nvidia. And I think that's how this is all going to play out. There would clearly be ups and downs, but I think when you read through it, that this is I believe just the start of a transformation that's happening in tech.
So then what keeps this rally sustainable and chugging along here? Is it still that data center build out, or do we need to see new AI use cases emerge in order to justify these valuations and for Nvidia to keep performing and outperforming like investors expect?
Look, I think it's about spreading, right? I mean, today it's only big tech, but now sovereigns are going to play. Think about Middle East. Think about everyone. So as this all starts to play out, you're now going to start to see globally Nvidia fueling it. We're talking about trillions of growth, and that's why I think, when you look at AI, in my opinion, this tech bull market has 2 to 3 years at least ahead of itself, because we're just starting to play out. We continue to believe it's only 10 p.m., was 9 p.m. a year ago, but it's only 10 p.m. in the AI party. That goes to 4 a.m.
4 a.m. to the party. Now, we were just talking about China. Jensen Huang really stressed the importance of that market in his conversation with Yahoo Finance. And he also pointed to the Trump administration and how grateful he's been for their support. Take a listen to what he told us.
President Trump really understands and really wants, and it's his policy, to have America win the AI race. And that's really foundational. Recognizing that that's important for national security, it's important for our economic security, it's important for American leadership around the world. And he understands that the American tech stack should be the world standard, just as the American dollar is the world standard that economies are built on. I've always enjoyed the conversation with the administration. They're very constructive. They're trying to help. They have a great sense of urgency, which I love.
So Dan, your reaction to Jensen's comments, do you see this as diplomatic posturing in any way to the administration, or is this a signal that policy really is central to NVIDIA's future?
Don't let the black leather jacket fool you. That's 10% politician in Jensen, 90% CEO. Look, right now, I mean, he knows he has the golden touch. And he continues to have that front row seat and really be a strategic advisor for Trump. But the reality is that if Nvidia can't sell into China, guess who gets strengthened? Huawei. So when you talk about the U.S.-China arms race, Nvidia plays a huge role. And that's why I think eventually, the coast will be clear, the green light's there, it's a pay-for-play model. China will be...
Shares of the top graphics chip designer. After investors continued to lock in some profits after Nvidia's most recent earnings report fell short of the market's highest expectations, the company's stock slumped 3.3% in the afternoon session. Investors responded to a quarterly report that, although impressive, indicated decreasing progress, which caused the decline to continue from the previous session. A little miss in data center revenue and a Q3 prediction that only met consensus estimates let down those expecting a bigger beat, even though Nvidia exceeded overall Q2 earnings and revenue projections. Markets frequently penalize highly valued companies for even a small slowdown in growth. According to a separate article in the Wall Street Journal, Alibaba has created a new, more sophisticated artificial intelligence chip that is currently undergoing testing. This development may lessen the demand for Nvidia's products in the Chinese market as Chinese businesses look for alternatives to American technology like Nvidia's. The pressure was increased when rival chipmaker Marvell Technology issued a poor projection, which damaged the semiconductor industry's reputation. The stock market overreacts to news, and significant price declines can be favorable for purchasing premium equities. The moment to purchase Nvidia is now. The shares of Nvidia are quite erratic. In the past year, there have been 20 swings of more than 5%. In light of that, today's action suggests that while the market views this news as significant, it is not enough to drastically alter its opinion of the company. The stock fell 0.4% a day ago after the company's second quarter earnings release, which met profit projections but fell short of the spectacular performance investors had grown to expect, was the last significant move we discussed. Despite an outstanding 55.6% year-over-year growth, the chip designer's $46.74 billion in revenue hardly met Wall Street's forecasts. Similarly, the company's projected $54 billion in revenue for the upcoming quarter just matched consensus estimates. Other indicators suggested that momentum was fading, even though adjusted earnings per share of $1.05 is above projections by 4%. Revenue growth slowed for the third straight quarter, and inventory levels rose as well, with days inventory outstanding increasing from 59 to 106. A report that was merely good, not outstanding, was sufficient to let the market down for a stock that was priced for perfection. At $173.87 a share, Nvidia is trading near its 52-week high of $183.16 from August 2025, up 25.7% since the start of the year. 5 years from now, investors who purchased $1,000 worth of Nvidia stock would be looking at a $12,999 investment. If you haven't been living under a rock, you should already be aware that generative AI will significantly alter the way big businesses operate. We favor a lesser-known but nevertheless lucrative semiconductor stock that is profiting from the development of artificial intelligence, even if Nvidia and AMD are trading near all-time highs. As August draws to a close, Wall Street seems to be exiting the artificial intelligence market. Almost all of the big companies involved in the AI boom experienced a steep decline on Friday. Chip manufacturers like Nvidia and Advanced Micro Devices suffered losses, as did CoreWeave, which supplies data center infrastructure, and Vertiv Holdings, which makes power and cooling components for the computers at the hub of the business. The Technology Select Sector SPDR Exchange-Traded Fund, which tracks software developers, semiconductor companies, and other tech sectors, saw a 1.7% decline. Dan O'Regan of Mizuho Securities stated in a note on Friday that there are a number of reasons for the sell-off. A few bad reports concerning AI may have also drawn traders' attention, he said, pointing to a post-earnings slump for Nvidia, which released its results on Wednesday. In the second full session following the release, Nvidia's stock fell 3.1%. Investors weren't satisfied even though the company reported strong profits and a better-than-expected outlook for the upcoming quarter. Because the results contain no news that may result in gains, and because the shares had a strong run before the earnings print, O'Regan speculated that some traders might be taking profits. Now that earnings are over, investors want to know what comes next, I said. China's developments were also causing a stir. The Wall Street Journal said on Friday that Alibaba Group, the biggest cloud computing company in the nation, has created an AI processor that might replace Nvidia's H20 units. Although the chip's functionality and uptake are yet unknown, O'Regan said it's another indication of China's growing ambitions to develop its own AI ecosystem. Additionally, a program that permitted Samsung Electronics, SK Hynix, and Intel's China affiliate to export American chip-making equipment was terminated by the U.S. Department of Commerce. America's tech relationship with China may be further strained by the move, which gives the three businesses 120 days to apply for new licenses, according to O'Regan. Regardless of the news, Friday might have been a difficult day for AI stocks. It's possible that a large number of Wall Street traders spent the Labor Day weekend in the Hamptons or on Nantucket. According to O'Regan, liquidity is extremely difficult. It becomes extremely difficult to sell anything, which might lead to a drop in price. O'Regan said he has heard rumors that algorithmic traders would be adjusting their positions at the end of the month because active managers are on vacation. It probably has some validity based on the lack of real institutional volume from active managers we are seeing, he continued. The market praised Nvidia's Q1 earnings 3 months ago, and the stock increased 3.3% the following day. Wall Street was unimpressed, even though the artificial intelligence chipmaker once again produced positive figures. Nvidia released guidance ahead of projections and exceeded earnings and revenue estimates for the fiscal second quarter. Nevertheless, the price dropped 0.8% the next day and in extended trading on August 27th. Since the introduction of ChatGPT, Nvidia has benefited greatly from the generative AI boom. In 2024, its stock jumped 171%, placing it among the year's best performers. The stock has increased by around 34% in 2025 so far. Nevertheless, investors are wondering how much higher the stock may rise given the company's enormous size. Nvidia exceeded Wall Street's $1.01 prediction with Q2 earnings of $1.05 per share. Revenue exceeded experts' forecast of $46.06 billion by 56% to $46.74 billion. However, for the second consecutive quarter, data center revenue fell short of projections. Nvidia reported revenue of $54 billion for the current quarter, exceeding analysts' prediction of $53.1 billion. According to the business, shipments of the H20 chip, a lower performance GPU made for China, are not included in the estimate. In May, Nvidia issued a warning that new export restrictions would result in quarterly revenue losses of up to $8 billion. It reached an agreement with the US government in August to start selling again in China in exchange for a 15% fee. During the results call, Jensen Huang, the CEO of Nvidia, stated that there is a genuine chance that Blackwell will be introduced to the Chinese market. All we need to do is continue to emphasize how crucial American tech businesses are to leading and winning the AI race, and helping to establish the American tech stack as the industry standard. Following the results, Dan Ives, Managing Director and Senior Equities Research Analyst at Wedbush Securities, gave the street his most recent opinions on Nvidia stock. Ives told the street that he was feeling more optimistic, because this is really just the beginning of an acceleration for Nvidia overall, even when you take into account the China data. Although Nvidia's data center income was less than anticipated, Ives believes this is a temporary problem. It's just more transitional, Ives said, adding that Wall Street continues to underestimate Nvidia's growth by 25% to 30%. When you look at data center over the coming quarters, you're actually going to see an acceleration. These figures increase your level of optimism rather than decrease it. Ives identified geopolitical tensions between the United States and China as the largest risk facing Nvidia. However, he believes it will only take a little while for that to be approved, and he anticipates development in the next 45 to 60 days. According to Ives, Jensen is 90% CEO and 10% politician. Ives had stated to the street in June that Palantir would be his first choice if he could only purchase one tech stock. He went on to say that since there is only one chip driving the AI revolution, it would have to be Nvidia. And Jensen and Nvidia remain the godfathers of AI. All things considered, Ives has not yet increased the target stock price for Nvidia following the results. His current price targets are $250 in the bull scenario and $210 in the base case. Ives told the street back in June that Palantir would be his first choice if he could only purchase one tech firm. He now claims that since there is only one chip driving the AI revolution, it would have to be Nvidia, and Jensen and Nvidia remain the godfathers of AI. Ives has not increased his price estimates following earnings, despite his positive outlook. He continues to set a bull case of $250 and a base case objective of $200. What does Nvidia's upcoming chapter look like? Nvidia became the first business to cross the $4 trillion market value milestone in July. Ives now anticipates that by early 2026, the chipmaker will have pushed even closer to a $5 trillion market valuation. There will always be those who have doubts. However, he stated that this is merely the next stage of the narrative. Ives is not just optimistic about Nvidia's stock, not only for Nvidia, but for technology in general, I believe. He went on to say that the US-China relationship will undoubtedly be the next significant driver of the tech sector. Ives believes there will be further increases in the future. He predicted that tech stocks will rise by an additional 8% to 10% throughout the remainder of the year. These stocks keep rising on the basis of everything, including our checks and earnings. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
And how much of NVIDIA's success and really the AI trade broadly tied to what we see in Washington? This feels like a story beyond just NVIDIA, especially as a lot of those big tech CEOs have been cozying up to the president and the administration.
It's new rules of the game, right? And I think, from Cook to Jensen to everyone else, I think everyone's understanding how to play it. And, when you think about everything that's happened in the Beltway, it is going to play an important role because right now it's this arms race playing out between US and China, tariffs clearly playing, and you got to see how the restrictions ultimately play out. But the reality is, for the first time in 30 years, US is ahead of China when it comes to tech because of the AI revolution. And because there's only one chip fueling the AI revolution, it's Godfather of AI, Jensen, Nvidia.
Marley, obviously we have seen a little bit of a sell-off here today after achieving that record high yesterday. And right now what we're kind of looking at is the morning levels, that 6450 area that we kind of highlighted has been holding. We've been pretty much consolidating there for the most part all day after that flush to the downside. And what you're hoping for is this is a consolidation and then we can actually break a little bit higher. We're also holding the 200 period moving average on the 15-minute chart, which is actually fairly key here. And so if we wanted to get a little bit more granular going into the close, once again, 6450 to the downside is really what you want to be able to hold if you're a bull in this market. And then to the upside, 6470. We have just been trading in this 10-point range. And if you're able to break above that 6462 area on the S&P 500, maybe with some conviction when it comes to volume, that probably will give you enough of a catalyst to try to move the market a little bit higher going into the close. But it has been a little bit of a tough day. You have month-end components taking place here as well. And you also have some rebalancing when it comes to small cap and mid cap indexes. So it's been a little bit of a rough end to the month here, but it has been a pretty decent performer overall for the S&P.
And as far as, volatility, I know, we've talked this week about how we've seen sort of upticks in volatility just sort of throughout the day. What have your observations been today on the week and also how it ties, to the seasonality of August generally being a quieter month as we come into our usually volatile September?
Yeah, it was kind of a mixed session if you're kind of looking at volatility just in general. We did see it obviously move to the upside. It's still not aggressive. We're still sitting at a 15.5 VIX index, which is not really aggressive at all. And right now we are kind of starting off the trend of September maybe being a little bit more of a swing or a challenge when it comes to the equity markets just in general. The other thing too is just market depth was actually a little bit greater here today, and volume on the E-mini S&P 500 has already hit the 100% level for the 50-day moving average. So actually we did have a significant amount of volume for the most part on a day where we're going into a holiday weekend. And volatility from a seasonal standpoint over the next couple of weeks, actually pretty much until the middle of September, traditionally, if you're looking at it on a seasonal basis, should get actually a little bit higher from here. We've been kind of waiting for that over the last 2 weeks, 3 weeks. It just did not come to fruition. We were seeing a divergence where our volatility this year was actually continuing to move lower, where traditionally we actually do see it move a little bit higher towards the middle of August. So we're sitting okay for right now. Once again, we're having a little bit of a rotation, and there's a lot on the calendar in September that could create some volatility as well. Not only the FOMC, which we're going to talk about ad nauseum here over the next couple of weeks, but you have options expiration for the September quarterly expirations taking place. Also some rebalancing at the end of the month with the JP Morgan collar. So some things on the radar just mechanically that could create a little bit of turbulence here for the markets.